The University of Michigan's Consumer Sentiment Index is a big deal. It's a closely watched measure of how optimistic people feel about the economy. And guess what? It just took a nosedive to a 3-year low. That's right, folks. Consumer confidence is about as low as a snake's belly in a wagon rut. The index now sits at a measly 50.4. That's a steep drop from where it was just a few months ago. Economists are scratching their heads because they were expecting a much rosier outlook. This widespread pessimism is showing up across all demographics. Rich or poor, young or old, everyone seems to be feeling the pinch. So what's got everyone so down in the dumps? Well, for starters, there's that pesky little thing called inflation. It's been rearing its ugly head lately, and it's got consumers feeling like they're getting robbed at a gas station. More on that in a bit. Remember the 1980s? Big hair, leg warmers, and oh yeah, sky-high inflation. Well, get ready for a blast from the past because inflation expectations are now at their highest level since 1981. That's right, folks, we're talking about the kind of inflation that could make your grandparents break out in a cold sweat. The year-ahead inflation expectation just shot up to a jaw-dropping 6.7%. To put that in perspective, that means people expect prices to be nearly 7% higher a year from now. Ouch! And it's not just short-term inflation that's got people worried. Long-term inflation expectations are also on the rise. This surge in inflation expectations is a real kick in the pants for the Federal Reserve. They've been trying to get inflation under control for months now, but it's like trying to nail jelly to a tree. The Fed's main tool for fighting inflation is raising interest rates, but higher interest rates can also slow down the economy, which is the last thing we need right now. With inflation soaring and the economy showing signs of slowing, it's no wonder that consumers are starting to get a bad case of the jitters. In fact, many folks are worried that we might be headed for a recession, and when consumers are worried, they tend to tighten their belts, which can further slow down the economy. One of the biggest concerns on people's minds is the labor market. While the unemployment rate is still relatively low, there have been some recent layoffs, and many folks are worried about losing their jobs. This uncertainty about the future is causing people to be more cautious with their spending. Adding to the economic anxiety is the rising cost of living. Inflation is eating away at people's paychecks, making it harder to afford everyday necessities like food, gas, and housing. This is especially tough on low and middle-income families who are already struggling to make ends meet. The stock market is a lot like a temperamental toddler. When it's happy, everyone's happy. But when it throws a tantrum, look out below. And let me tell you, the market is throwing a major tantrum right now over this whole inflation and recession thing. The news of crashing consumer sentiment and soaring inflation sent shockwaves through Wall Street. Investors, who hate uncertainty more than a cat hates baths, started hitting the sell button faster than you can say bear market. Treasury yields, which move in the opposite direction of bond prices, shot up as investors fled to the relative safety of government bonds. The US dollar, which usually strengthens in times of uncertainty, actually weakened as investors sought refuge in other currencies. And gold, the classic safe haven asset, surged to new record highs as investors piled into the yellow metal.